Investors and traders, welcome to the channel Market Chart Pattern. Today is 25th of January 2025. I hope everyone is having a great weekend. We will be taking a look at the key US markets in this video. This is going to be part one, where we'll take a look at the US dollar. We'll also take a look at the debt markets through the eyes of US Treasury notes, shorter end of the curve 2-year note, and then 10-year note, and then the long bond futures as well. A brief look at the gold market. And I will not be going into too much depth for the fiat currencies. I'll actually be creating a separate video for that. And then the next video I will release will be tomorrow, in which we will begin to take a look at US equity markets and also some of the European markets as well. And then we'll also try to take a look at the sector rotation as well, which is taking place. As always, this video is for educational purposes only, and it is not a financial advice. Okay, so what we are looking at is the daily chart of the dollar index, and here I've drawn this pattern formation quite some time ago, so long time subscribers will know when one of the videos I drew this. And we were looking for the market to get up to around 109.70, maybe a little bit higher as well, because we had the ABCD completing till around 110.50, 110.40. And this pattern was actually we were watching for this price action for some sort of a high to come in, or some sort of a top to come in. And this is exactly what we have seen. 13th of January, this is when the equity markets also began to bottom. We saw a high coming in the US dollar, and then we have seen a decline for a number of days in the market. And the market actually closed right at a very, very important point, which is the 61.8% retracement around 107.17, and the low had been around 107.03. In my opinion, this is really, really key, because we have some structural support coming all the way back from this massive double top right here. If we are able to get close below this 61.8% retracement and 107.7 level, if we are able to close below the 107 handle, then in my opinion, I think we can see the dollar actually weaken further. So this is what we were watching for, this pattern formation, and I had done a special video in which we covered this. And in fact, I received some negative feedback as well, but you can see the patterns, they don't lie, either they will work or they will fail, and this time it seems to have worked, and it's moved right into a key support level around 107, which is the 61.8% retracement. And now, before moving on to the weekly chart, I just wanted to show you this really important correlation which exists right now, and it actually has been in existence for quite some time. And in a previous video we had actually taken a look at it, which is the 10-year Treasury note yields. So this bottom part of the chart, I have actually created a new pane in this data that you see in the line chart. This is the 10-year Treasury note yields. This is in the yields format. What you are seeing here on the y-axis is 4.625. This is where the yields close. This is what the 10-year Treasury note is yielding. And if we just go back and have a look, we can see there exists a pretty nice correlation, which at points in time is much stronger, and certain point in time is not as strong. So if we just take a look at this right here, going back to October of 2023, that's when also the stock market was bottoming around 20th of October 2023, around that time frame, don't remember exactly. We were actually looking at a peak coming in the US dollar, and importantly, we saw the 10-year Treasury yields actually pulled back. So you can see that's a really nice correlation. Peak coming in on 19th of October, then we have a bottom coming in the US dollar, and also a bottom coming in into the yields on 27th of December 2023, and then we see a move higher in the dollar, and then we also see a move higher in the yields. There was a pretty significant drop in the yields around here, but the dollar still kept on moving a little bit higher, and then we saw a dip in the US dollar as well. Then the peak coming in around 24th of April 2024, and this is where the dollar was actually also peaking, and we were really we had our key pattern formations right here, and we were looking for the dollar to move lower as well. But you can see that there is a pretty solid correlation which exists between the 10-year Treasury note yields and the US dollar. And right here, as of September 2024, we have seen the US dollar actually begin to strengthen, and then you can see the yields have also been rising now, and it's a pretty good correlation. You can just have a look at this, and especially this bottom coming in on 6th of December 2024, the yields began to rise and the dollar was also rising. Now, if this correlation, the way it is moving right now, and it's pretty strong, what we can see is that the yields also peaking on the 13th of Jan and actually putting in a pullback. We have also seen the US dollar. So the way I'm reading it is, if US dollar begins to actually move lower or weaken, we could in fact see the yields pull back as well from a 10-year Treasury note, and then the shorter end of the curve will actually take a look at slightly later. So really important correlation to take a look at. It shows that where the dollar is going, the yields are moving. The yields are moving higher, than the dollar is also moving higher. So an important correlation to keep an eye on. And now we'll take a look at the weekly chart. Here we go. So this is the box that I had drawn quite a while ago, and we had actually hit our target by price moving right into this box, and then we were looking for a retracement, and I thought that 107 level was really important high, but the market was so strong that it actually took over that level and went right into the 61.8% retracement and 1.272 expansion, a little bit higher, but thus far it has failed to move higher. There was a chance because the dollar was so strong, it would hit 111, which is the 1.618 expansion of this range, and also the 78.6% retracement. But the price action as of last Friday, I think what we are going to see is most likely a sideways market with the potential that we might have seen, which is a little bit early to say, but we might have seen an important top in the dollar. There's a certain possibility for that. So there's a possibility we could see something like this take place. So we have to wait and see on the weekly chart further signs of distribution. And again, on the daily chart, the 107 level, which is around the 61.8% retracement, is very important as support. If the market is able to break below that, and I think we could see a further move lower in the dollar, which means the yields on the 10-year Treasury note also moving lower. So thus far the market has actually worked based on the patterns quite well, and this is a really negative looking candle where the dollar lost about 1.83%, or nearly about 2 points. And we haven't seen this big a bearish candle in this entire move. We had in fact only seen 25th of November week, where the move was about minus 1.54%, but there was just no follow through. This is why it's really important to actually wait and watch and see a follow through. The only thing is that when the dollar becomes really bullish was on 30th of September, we had seen about a 2% move to the upside. So here it came close to 2%, but not close enough. So we'll just wait and also watch for further price action clues, whether it is an important resistance level, whether we might have seen some sort of a high in the dollar. Longer term, I just want to show this chart for the new subscribers. We have actually been tracking the symmetry in the market. We had seen the dollar putting in a peak around the start of the millennium, so around 2001. But look at this move. The dollar really challenged these highs, which were put in about July of 2001, going back into the early 2002. So there is a possibility that what we are seeing here is maybe some further strength can come into the dollar. The month is not closed yet, so we haven't seen a close on the monthly candle, but it is looking a bearish close thus far. But this real symmetry is that it had taken about 10 years for the dollar to peak, and then we have a symmetry which took place about 12 years in time, when the dollar put in a high on September of 2022. So this is an important symmetry we are watching, but the more important aspect is also that the market retraced about 78.6% retracement of this high back in July of 2001 to the lows which were put in April of 2008. So the market actually, it's a really strong momentum. So it is actually moved a little bit higher, but then closed below the 78.6% retracement, and now it is actually trying to challenge a 78.6% retracement of this high to these lows one more time. So this is what we are watching in the US dollar. And now let's take a look at the treasury notes. So we'll start by taking a look at the 2-year treasury notes. This is shorter end of the curve. We have seen a pullback in the yields. This is based on yields on the right hand side. These are all yields. And interesting to see 4.26% is what the market is yielding for the 2-year treasury note. The pattern reveals there's a chance that we are likely to see a further pullback into the yields for the 2-year treasury note, and this is the symmetry right here. So it could actually move right into roughly about 4.12%. And then what is important to also watch is that the price has closed below the 20-day moving average, so the momentum shorter term is also turning negative. Whether this has the potential to be a double top formation, the market needs to close below the 4.07 percentage in the yields. That will actually, in my opinion, give us the confirmation that we might have seen a double top right here, something akin to like a top like here. So there was a chance that market could actually hit this 4.46%, which is 61.8% retracement. Thus far the high has been 4.424%. So this is what which was pretty close enough, but didn't hit the exact number. It happens. So this is what we are watching in the 2-year treasury notes. Looks like the yields are coming into pressure, and the dollar begins to ease. And then, in my opinion, the yields are likely to ease further. Now let's take a look at the 10-year treasury yield. Here we go. And what we are looking at is actually the market has pulled back. It found support from the 38.2% retracement of this low right here, 6th of December, to the highs, which came in around 13th of January, when the stock market also began to bottom. So a pullback in the yields actually helped the risky assets as well. So it needs to close below this 4.5% level, in my opinion, for the weakness, further weakness to come into the market. And we could then see that perhaps we might have seen some sort of an important top in the yields by the look of it. So this is what we are taking a look at the 10-year treasury yield note. Now on the flip side, if we take a look at the future, so 10 years treasury note future chart. This is price on the y-axis. So it's a representation in price, not in yields, and the bonds, they move in inverse. When the price moves higher, the yields move lower, and vice versa. So what we are looking at is that there is some support which has come in. It's really massively bearish market right here, 38.2% retracement. That was the previous rally up to. So here what we have seen is some support come in from the 78.6% retracement of these lows back in October of 2023 to the highs, which came in on the 11th September 2024. We also had this 1.618 expansion right here. So we have seen some sort of move higher in the market, but to be honest, we need to use our symmetry concept and keep on treating this as a rally in a bear market. So what is happening is basically we could expect the yields to the price to move as high as 109.29 or 110 roughly. Breaking above this, in my opinion, would be a key development. And if I just draw the retracement of this 38.2% retracement, comes in, there we go, 110.14. So breaking above 110, and then especially 110.14 with a good follow through, would indicate that we might have seen some important a low coming to the market, or a good bottom. This is what we'll have to wait and see and watch. Now let's take a look at the long bond futures. This is going to be the 30-year bond futures chart. Here we have seen a rally in the market as well, but thus far it just looks like a more like a bounce. And if we take a look at the symmetry concept, this is the biggest rally in its entire decline thus far. So we just take that, copy it, and move it right here. And then let's take our retracement level. So we take this high to this low. That's our 38.2% retracement. And let's draw the retracement levels around here from this one. And yeah, this is going to be the 61.8% retracement right here. So this zone, in my opinion, is really important. Should the market get to this level, so 117, getting above 118, I think the market is gonna begin to look more bullish. But thus far these are just rallies which take place and then they get sold off. This one was a perfect 38.2% retracement of these highs to these lows. So the market really needs to do a lot of work, get above these really technical levels if there is going to be a chance for a good low or yields to move down further. We have to do a lot of technical work to get above these levels to give us the confidence that we might have seen some important low if there is a low. So it is right, this bounce that we are seeing is coming right from the 78.6% retracement, just like the treasury notes of the 23rd of October lows, 2023 lows, and the highs which came in September. I've not drawn the expansion right here, but this might be a 1.618 expansion. Let me actually draw that quickly for you. Yeah, actually the market went a little bit lower, right to the 78.6% retracement. Slightly different pattern to the treasury notes in here. I think I might be the 1.272 of this one. Not drawn it. Here we go. No, not even that. So yeah, this 111 level is really important, the 78.6% retracement. So this is what we are watching in the interest rate markets. Again, there's a pretty good correlation between 10-year treasury yields and the US dollar, so we'll just keep on watching those two markets really carefully. So this is the gold market. Now with the gold market, the move lower in the US dollar has helped this market. When we had a look at this market, we were watching for this triangle pattern. The market had actually broken above this. However, there were really two scenarios playing out, that maybe it's still a correction is going on and we could see a pullback right into this zone, or we continue higher as sort of a breakout. It looks like it might have been the correction might have been actually over, and the market is actually trying to attempt all-time highs on the futures market. And if we just take a ABCD, there we go. Yeah, so we could see maybe a scrape towards the all-time highs as possibility. And if we were to take a look at this on the spot market, this is what we thought, or what I thought we might actually see, but it did not pan out. And the reason was that we had supply here, and the market might find resistance right here as well, but the market hasn't done that. So it's actually very close to the all-time highs on the spot basis. I think the all-time high was 2790. Yeah, 90 spot 17, and it has come as 2786. So just missed it. 2762, 2760, sorry, 2790 spot 17, and this time it was 2786. So just missed it by a few dollars, but came pretty close. There is a chance maybe it tries to attempt an all-time new high. So I'm going to remove this because this pattern, of course, did not play out the way I thought it could. But again, it all depended upon whether whether the market was going to find resistance from here, or is able to get above the resistance, and was able to get above the resistance. So we'll just keep on watching this market, but this has been a pretty strong, nice bull move to the upside, with an attempt towards new all-time highs. Now, if we take a look at the silver market, this is going to be the COMEX silver. This is futures chart, not spot, so spot chart might be something similar, but the price levels will be different because it's a different market. We can see that the price action is contained within this triangle formation. I like to call them dynamite triangles, because when they break out in either of these directions, basically break off the trend line, is rather dramatic when that happens. So still contained right into it. The market is not able to convincingly get above this 38.2% retracement of these highs to the lows right here. And the really interesting thing is that the gold is way up here, but the silver is right here, which just means that the silver is actually much weaker market compared to gold. However, it's able to break above these levels and start this bull move. We have an ABCD, which could see the this market hit 3667 and even 3870 as well. All depends, and on the flip side, if it breaks to the downside, then of course these lows around 2650, they come into the play. So we are watching these markets, and I will keep on creating videos to keep you guys updated. And if you happen to like our videos, then please give it a thumbs up. If you like our technical analysis based on pattern recognition and Fibonacci retracements, then please do subscribe to the channel. And if you do, then please hit that bell icon button. That way you will know when the new videos are posted and you will not miss anything. Thank you very much for watching the video. Good luck, good trading, and have a fantastic weekend. Speak to you guys soon.